The food and beverage sector has been facing headwinds as consumers, beset by inflation, seek out alternatives to higher prices at the grocery store. And of course, that's not great for the branded food giants. They want to charge a premium for their products. That's why they advertise, for example. Kraft-Heinz reported fourth quarter earnings and missed for a fourth straight quarter on revenue. The stock has seen some selling today, and it's down more than 20% in the past year. We're joined by Arun Sundaram, Senior VP of Equity Research at CFRA Research. Great to see you, Arun. Thanks very much for joining us. Kraft-Heinz, would you be a buyer of the stock now?
Yeah, we would. I think, clearly companies facing many headwinds, and the Q4 report was pretty disappointing. As expectations going into this release was pretty bearish as it is, and they did miss expectations there. But I think Kraft-Heinz will see better days ahead. I think we might start to see better results by Q2 of 2025. That's our expectation right now. But we would be buyers of the shares. I think the stock has taken a pretty large hit over the last year. It's looking fairly cheap from our perspective. It's trading at about a 10 times forward PE. Historically, it's been trading at 13 to 15 times of a forward PE. So pretty cheap in that regard. Its dividend yield is now approaching 6%. So pretty high dividend yield. That's above the packaged food peers. So we would be buyers of the stock right now.
That's quite a discount on the price earnings ratio.
Yeah. I mean, it's not just Kraft-Heinz. This is a phenomenon we're seeing throughout the packaged food space. Multiples have come down across the space, mainly because it's been really difficult to grow volume sales in this environment. As you alluded to, consumers are trading down. They're also trading out. They're opting, they're not buying certain products at the grocery store anymore. And for all these companies, Kraft-Heinz included, it's been a real struggle to grow volumes. Volumes haven't grown in 3 years for Kraft-Heinz.
Wow.
The only reason they've seen some growth is because of higher prices. But I think that's going to change this year, not just for Kraft-Heinz, but throughout the industry. You're starting to see more investments in price. So companies are starting to lower prices, and hopefully that will turn around volume sales.
It's amazing, really. Why has Kraft-Heinz been struggling? Is it just partly food inflation? I mean, we've all been shocked at how our cost of nutrition has gone up in recent years.
Yeah, I think partly, I think the number one driver of lower volume sales is certainly the higher prices, not just over the last year, but really over the last 3 years. Food prices on average in the U.S. have gone up between 20 to 30% over the last 3 years. So clearly that's going to have an impact on demand. There's an elasticity effect. Especially with those lower income households right now, they're struggling a little bit more. And a lot of these packaged food companies do tailor a bit more to these lower income consumers. And that's where we're seeing a larger pullback in spending. And certainly, I think some other factors that are at play here that we haven't been really able to quantify yet, but it's certainly at play, is the effect of these weight loss drugs, these GLP-1 drugs, that's likely having an impact on volume and consumption trends. Maybe going forward this year, there's an initiative in the U.S. about Make America Healthy Again. That initiative could impact processed food sales as well. So there are some headwinds on the volume side, but I think these companies are doing whatever they can right now to try to improve volume sales. That includes lowering prices, increasing promotions and discounts, increasing marketing. And also lastly, and this is the most important one, is focusing on innovation. Not just keep the same old products that you've had on the shelves for the last several years, but really innovate and try to find products that meet the evolving consumer taste. And I think that's what Kraft-Heinz is also doing this year too. They're planning to step up their innovation and introduce more higher quality products, as well as products that kind of meet the current preference of the consumer.
If you were to compare Kraft-Heinz with, say, Campbell's Soup, have they done a better or a worse job than Campbell or other processed food companies?
Yeah, I would put all these center store packaged food companies on a similar boat right now. A lot of them are struggling to grow volume sales. Kraft-Heinz, Campbell's is in that same conversation. Conagra Brands is in that conversation. General Mills, you can put them in that conversation as well. Even some companies that are predominantly focused on snacking like Hershey, for example, or Mondelez. Snacking is historically one of the fastest growing categories in the grocery store. But even right now, snacking is facing a slowdown as well. Consumers are snacking less, again, probably due to the higher prices. So you even keep seeing companies like a Mondelez or a Hershey, which historically they've seen stronger growth. Even they're seeing a bit of a slowdown there. So really, like I said, it's an industry-wide phenomenon that it's a real struggle to grow volume sales in this environment.
Is this a fundamental shift in consumer behavior, though, cutting back on packaged foods?
I think partly it's due to that, but we're also hearing consumers they're eating more at home. The cost of dining out has actually gotten 4 times more expensive than the cost of cooking at home. So in that regard, it makes sense that more consumers are eating at home, cooking at home. But yeah, you're seeing a slowdown in certain pockets of the areas of the grocery store. It's certainly center store packaged foods is seeing a bigger slowdown. Fresh categories, like in the perimeter of the grocery store, that's where you're actually seeing better growth there. Fruits, vegetables, proteins, things like that. And it's because consumers are cooking more at home, cooking fresh meals at home, batch meals that can last longer than a lot of these packaged food products can.
We have Kennedy taking over as head of America's health bureaucracy. He has talked a lot about the need for healthier food. Do you think he really will push through anything that changes the economics of the industry?
Yeah. So I mean, I think the risk might be a little bit overblown there. I'm not saying that this won't be a headwind for packaged food companies. I certainly think over at least the next 4 years, this will likely be a prolonged headwind. But I mean, these companies have been facing changes in food regulation for decades now. Even during the Biden administration, there's been changes in food regulation, especially when you're producing products that are tailored to K through 12 schools, for example. That's been changing dramatically over the last several years. And we even recently, under the Biden administration, there was a ban on a red food dye. And so we're likely going to see more of those bans on certain food additives, in my opinion. But again, these companies have experienced this before. They'll find ways to reformulate their products. It might come at a higher cost, and that could potentially eat into margins. But from a perspective of food regulation, it's been something that these companies have navigated through before.
And they're pretty agile when it comes to lobbying. We know that it can take years before real changes go through. It's interesting, in Canada, we're moving towards, just FYI, we're moving towards prominent labels on the front of packages saying if it's high in saturated fat or salt, instead of burying it in small print at the back. But we'll see how if that actually has any effect on consumer behavior. Arun, thank you very much indeed.
Thank you.
Arun Sundaram, Senior VP